Hey folks, welcome to the Rate Update with Dan Frio. I am Dan Frio and got a friend of mine that's joining us. I don't ever know which way to point. Steve, I found Steve on YouTube. The guy's awesome. Okay, so the guy's awesome. He's in Southwest Florida, and I reached out to him, and he was more than polite enough to email me back and call me, and we've had some dialogue before this. And he's a realtor down in Florida, and he does all kind of stuff. And I was just, when I first, like I was just saying to you just a little bit ago, when I first looked him up and tried to Google him, because I reach out to a lot of YouTubers, when I Googled you, I've seen the pictures without the beard, and I'm like, dude, that ain't him. And then I'm like, hey, wait, his eyes look the same. Everything kind of looks the same. That's him. And then I read your bio. So thanks for joining us today. Tell everybody a little bit about yourself, and hopefully we can link this to your account. You can link it to mine, and we can, build this thing if that's okay.
Absolutely. I appreciate you having me on, Dan. Yeah, I mean, I'm a local real estate broker here in Southwest Florida, realtor since 2003, started a brokerage 2006, sold our brokerage in 2018, and pretty much now just been full-time in real estate investing as well as YouTube.
So you're buying now? All your videos, or you're not buying, and you just sold a place?
I'm selling I've been liquidating. I've been selling everything.
Got it. That's right from the way, and he's in the business. So again, guys, we don't try to promote FOMO here, and that's what you probably get a lot of times. Well, maybe not on the context you have. What I do on a daily basis, I just try to educate people on the financing part of mortgages. And I get all the pushback saying, "Oh, it's FOMO for this." I'm not telling you to buy a house. I'm just trying to educate you guys, saying, okay, there's programs out there and so forth. So what we're going to talk about today is how important your credit score is. And a lot of people, they thrive on getting an 800 credit score, but they really don't know, how do you get your true credit score? What's a good credit score? And how do you go about, finding out I'll call them credit hacks. So what's the most common thing that you normally hear when it comes to credit scores, or that people just don't understand?
When I was full-time working with real estate clients, you would run into situations like you run into all the time, where people they're not able to get financing, or their interest rate is much higher. And then that could push them out of getting financing, and then the deal falls apart. And especially in today's market with rates rising, I think it's really important that people start to concentrate on increasing their credit score, especially in the future, when I think there's going to be a lot less borrowers in the market, and financing might get tighter. I think it's important for people to learn, which is one of the reasons why I wanted to reach out to you and pick your brain on credit scores and how people can raise those up. And, we're going to put this on our YouTube channel as well, so we can help educate our audience as well, because I think I forget the analysis, maybe you have it, but if your credit score is lower, it's like thousands, if not hundreds of thousands of dollars that you pay more in interest, whether it's a car loan, home loan, or whatever, over your lifetime. And it's simple things that you guys could do to bring that credit score up and save a ton of money, have more money in your pocket to invest.
Here, the biggest piece of the puzzle that a lot of people get confused on, and that's why I created, I'm going to show you something. This was kind of wild, because when you reached out to me saying, hey, can we talk about credit scores and so forth? My number one video still to this day is my credit score hacks. And this was years ago. It's probably the worst video I did. I was at home, and I'm like, I just sitting there like this and so forth. And I have, for me, it's huge. It's like 300,000 views. And the intent was just to go out there and say, hey guys, talk about basically like, how do you find out your real credit? So the biggest thing that a lot of people don't know or don't understand is how many credit scores there are. So one of the first things is, like, everybody, we get in arguments with people. They're like, well, my credit score on this system shows I'm at a 740. Okay. And then we pull their credit and it's a 680. And they go bonkers. So then they're like, well, that can't be. So the first thing I want to explain to everybody is there are all kind of scores. But the one thing, the free credit score that you get from most places is called, what they call a Vantage Score. And the best thing I can explain what that is it's just an educational tool. That credit score, no lender, no entity in the whole country uses it for anything. And like Steve was saying, the higher your credit score, the better your interest rate on a car, interest rate on a mortgage, lower your insurance, lower credit card rates, everything. And you can't just think of one segment. Well, it'll get me a lower mortgage rate, so I'll save $100-200 a month. Well, it's also should be able to get you lower insurance scores. That's a whole nother video I would like to do, because I just changed my insurance from Allstate that I was at for 20 years. And I moved over to a broker buddy of mine, kept asking. I'm like, okay, give me a quote. It was $2,000 different. That's almost $200 a month. So if you're like, okay, my expenses are getting out of hand, I have even down in the description below my buddy's link. Just link it and get a quote. I mean, it doesn't hurt you. But getting back to the credit score piece, what you want to do is you want to focus on your FICO score. Okay. And Steve, I'll throw this up here real quick so people just look at it, but the intention wasn't to promote this channel or this website. This is a website that I actually created several years ago, and I just updated it. It's called Credit Scores and More. And I'll just go through it real quick. And then Steve, we'll open up and I'll answer any questions, or you can fill me in with what you're hearing a lot about. So the first piece of the puzzle that we go to is right here, Credit Scores and More. I feel like this is an infomercial, and I promise you it was. It was Steve's idea of the context, and I'm like, dude, I got a website. So the free credit score is just that. You're going to go to Credit Karma or Credit Sesame, sign up. It's free. Don't buy any of the crap that they're trying to sell you. Just get your credit score. Use it as an educational tool. But the one piece of the puzzle that works is, what is your real credit score? And it's right here. It'll take you to My FICO, okay? And the My FICO basically is, let me get back to us, is the true credit score that lenders use. And your employer probably will pull your credit before they hire you. If you got absolutely terrible credit, you might not get a job. Okay, so it plays a bigger role than most people think. And I'll leave it at this, and then I'll throw over the mic back to you. The one main reason why I created the video that I did and this website was one particular area that people always kind of stub their toe on: paying off collections. Okay, let me explain this real quick, and then I'm going to throw it over to Mike to bring in his input, and then ask any questions that we got. Here's how collections work. And this is one big piece of the puzzle. Let's say you have a collection, it's from 5 years ago, okay? And it doesn't matter if it's $1 or $50,000. The dollar figure doesn't matter at all. All the analytics within the credit report reads is it sees collection, last active date, okay? So as the last active date keeps getting older and older and older, the impact to your credit score keeps diminishing. All right. So here's what happens. It's a bill from 5 years ago, 6 years ago, 7 years ago. It probably isn't really playing much of a role on your credit score anyways. So what some people think is like, hey, I just got a tax refund. I got this $3,000 collection account that I'd like to get rid of and help my credit scores. So they'll go in and they'll pay that collection. Well, all that happened was it just took the last active date, because remember, the dollar figure doesn't matter. So now the dollar figure goes to 0, but the last active date is going to read today. So basically how the algorithms read it is saying, well, you just got a collection today. Your scores are going to drop. So if your lender's requiring that you pay it off, don't pay it off prior to anything. Pay it off at the closing so it doesn't affect your credit scores. That's the biggest hack I can come up with, other than some other things. So did you know that part of it? Because that throws a lot of people for a loop.
Yeah. And I think I might even still be confused by it. So don't pay that off until you're ready to close.
Right. So if you have to pay it off, sometimes you don't have to. So again, it's based on the last active date that reads on your credit report. So let's say, again, I'm looking at that credit report, and that collection account is from 2001. It probably is playing no role. The last active date is 2001, let's say. It's probably playing no role in your credit score because it's way too old. So you go in today and pay it off. The only thing, what's going to change is now it's going to say the last active date, instead of being 2001, is going to be May 13th, 2022. Boom. Your credit. Now it says, oh, you just got a collection account. It's going to read the collection. Again, the dollar figure doesn't matter. Doesn't matter if it's $1 or 50,000. It's going to read the last active date, the last activity date is May 13th, 2022. Bam, your credit score is going to go down.
Damn, I did not know that.
Yep. That's one of the biggest things that people get stuck with, because their lender, new loan officers or new whomever will go in and say, you know what, if you pay off that collection, your score is going to go up. No. And once you do it, there's nothing you can do. So that's one of the biggest things that helps people. And then on my website, I just added, there's 2 more features that we just added. You can add your rents now to your credit report. They're saying, and I just posted it probably within the last week or 2. They're saying that could give you potentially up to 40 points within 30 days, because if you rent from somebody, that company probably 99% chance they're not rating that on the credit report. Well, if you've never missed a payment on that, it can help you in a big way. So that's another tool that's out there.
So if you're renting from, say, just a mom and pop small landlord, how can you get verification of those rents? Does it have to come from them, or can you show bank statements, or what?
They'll dig into it. They'll ask you for proof on your end, proof on the other end. So they're not just going to willy-nilly throw it on there. You have to show proof. So the best way is you can go into your bank account and just scan your bank account if you pay it that way. If you pay cash, that's a toughie, unless it's an entity, meaning it's an LLC or an apartment building or something like that. But you can't just go to your buddy and say, hey, I need a verification of rents. It has to show perfect so I can boost up my credit score. That won't work, but you have to validate it somehow, some way. A lot of people use Zelle or whatever, PayPal or whatever, and pay it via that. You can give them those records. You have to document it, but it will get added to your report. And if you've never missed a payment, it can only help you. So that's another piece of the tool. The website, I kind of try to keep updated all the time. It's a little side thing that I just have people go there and say, here's this. Another one, and then I'll answer any questions you got. People say, if you pull my credit, my score's going to drop. Probably. But there's 2 areas that I want to discuss on this. One, it's what's called a soft pull versus a hard pull. Okay. What a hard pull is that a lender or somebody's checking on your credit for a reason. Okay. That's a hard pull, and it will affect your credit scores. Okay. What increments or how many points, nobody really knows. But there's also a soft pull. That means if you pull your credit, there's no hit to the scores. So on the website, if you actually I'll go back there. And again, I apologize. I wasn't trying to promote this thing. If you go right here and click your true credit score, it's going to take you to my Fico right here. If you pull your own credit, there's no hit to the score. It's called a soft pull credit report. Okay. So you can, in that credit report, scores will probably be identical to the ones I pull. And because you're pulling it and there's no hit to the credit. That makes sense?
Yeah, for sure. Do you recommend somebody pulling their own and then?
I would. What do you have to lose? I mean, truly, it costs you, if you use that link, I think that you save 20% or something like that. You might spend $20 on one report. So there's TransUnion, Equifax, and Experian. There's 3 reports. Right. Believe it or not, and I'll keep diving down this entity. For example, TransUnion. Everybody's probably heard of TransUnion. TransUnion has, the last I looked, I think there's 3 or 4 different models that they have. But the last time I looked, it was 3. Let's say the models we're just going to use A, B, and C. Okay, so TransUnion has models A, B, and C. All right. Under each one of these models, there's subsections. And this is where it gets confusing. So under model A, you're going to have subsections. Okay. And I'm getting to something, I promise you. You're going to have a score. What I mean by that is you're going to have, under TransUnion A, you're going to have 4 different scores. Those scores is a mortgage score, an insurance score, credit card score, and I just went blank. Mortgage score. I said that. Mortgage, car, insurance, and what am I missing? Credit cards. So again, TransUnion has 3 models. Each model has 4 subsections. So TransUnion alone has at least 12 different credit scores. People don't know that either. They're like, my TransUnion score is a 680. Well, which one is it? Model A, mortgage, model B, car? We don't know. So if you pull your FICO score via that system, it gives you everything. And that's where people get confused. They're like, hey, there's 100 numbers on here. I don't know what's what. Well, I'll go and say, well, we use Model B mortgage score. What is that? And they'll scan it and they're like, oh, it's a 783. Sweet. Now I know what most likely I'm going to get.
Gotcha. So let's back up a little bit for a second on the older, anything negative against your credit that you're talking about on older stuff. How old does it have to be? Like, let's say it's something that maybe 18 months ago. Is that new enough for you to tackle that, get it paid off, or negotiate that?
I wouldn't do anything. I wouldn't do anything on any collections.
Nothing.
Nothing.
No matter how new or old.
Right. Unless you have to. Okay. Let's say they're going to garnish your wages. Well, you got to pay it. Or something else. But if your lender says, hey, you got to pay that off now, don't pay it off. Please don't pay it off. Because if something happens or they have to repool your credit, I can almost assure you it's going to drop. So what happens is, let's say the collection hits 6 months ago. It's still very, very, very active. Once it gets over a year, 18 months, 24, as the time extends, it's having a less of an impact on your credit score. So again, if it's 3, 4, 5, 6 years old, it probably isn't even, it might affect your credit score a point. So, but if you pay it off, it could affect you 30, 40, 50 points to the down. So you might be shooting yourself in the foot.
So right now, and I've had this forever, I've had LifeLock, and I think they're owned by Norton now, but basically it's all comprehensive, including credit, monitors your credit, identity theft, all that kind of stuff. It's pretty good. I mean, it does its job. I mean, it might be a little delayed when I do a large purchase or something like that. It's a little delayed. What's your take on a company like that or other like kind companies?
I have no problems with any of them. What you just have to do is you get what you pay for too. So, you have these huge reputable companies. I would probably go with them because here's the downfall of a lot of like collectors. Okay, let's kind of go down that. The debt management companies or the credit repair companies and all that. I've done this. I've been in this business for 33 years. So I've kissed a lot of those frogs. I hate to say it, 90% of them are just BS. They'll charge you $3,000 and they'll send out, letters to all the creditors, and then they'll start working on it. By the time you spent all that money and everything else, you probably could have cleared up your credit on your own. Yeah. And then the tools that we have as well. But I have systems like that as well. I sign up for all this free stuff too, like Credit Karma, Credit Sesame, things like that. It's free, and they'll blip me back like LifeLock does. As soon as I'm doing a purchase, it'll be bloop, credit score is just pulled. Sweet. So now I know, but some of these systems, it is worth the 10, 15, 20 bucks a month to really secure things. The one thing I would advise you guys is a lot of times when you apply for a loan, some of these companies will freeze your credit. So you apply for a loan, we get this, that happens a lot. They'll apply online. We'll go through, we'll start working on the file. We'll hit the credit report. Credit comes up blank. Everything's frozen. So just so you know, when you go out there and you're looking for a car or a house or credit cards or whatever, unlock your credit before you do that, because the lender or whomever's pulling your credit, they're going to hit a complete brick wall and they won't be able to do anything until you unlock your credit reports. And I think in LifeLock, can you just go in there and it's basically a click of a button to unlock them or whatever?
Exactly. That's exactly how I have it set up. I have all of mine frozen. All right. So I think the last thing that I want to address with you is, let's say I'm looking at just cleaning up my credit. I have no intention of getting a home loan anytime in the near future, maybe 12, 24 months down the road. What could someone do right now if their credit score is, high 5s, low 6s? They want to get that up. They want to get prepared. They want to get a home in the future, or future investment properties if the market does crash, which I anticipate it will. What are your suggestions? Like maybe top 3 tips that they could do, like right now on their own without spending any money. What could somebody do?
And I gotta combat a little bit against the non-spending money, and it might be $20. Okay. So what you have to do is we got to get a benchmark. Where are we starting from? because like you said, they have a 560, a 580, they want to get it up. But where did that 580 credit score come from? Is it a Vantage score, which is irrelevant anyways? Or is it your true FICO score? And we'll reference Vantage and FICO. Okay. So what I would suggest you do is you can go to my website even if you want to. It's called Credit Scores and More. And again, the whole video wasn't prompted for me to promote that channel, but you can just Google it if you want to. You want to go to My FICO. Okay. And then you have a link through my system. It gives you 20% off. And so pull your credit. You can just use one of them. Say, for example, pull your TransUnion score, but pull them all. Okay. So remember what I said, there's the 3 roots and all this other stuff.
Yep.
Now you have at least a benchmark. Okay. A true benchmark. Now let's see where we are. Okay. A lot of these systems have what ifs. So you can go in there and actually go, okay, I got a Discover card for 10 grand. I used it too much. I know we just went to Hawaii or whatever. But if I paid that down, what would that do to my scores? That's the what ifs. So, but again, we start with a benchmark. Then what you want to do is the best thing I could say is review it for accuracy, because most of the time it's completely inaccurate. Okay. But let's say it's accurate. All right. So now what do you do? Well, now let's look at, are there some accounts that we can tackle? So the biggest thing you want to look at is your utilization rate. So what you're going to do is on the credit report, you're going to look at what your high credit is. So let's say, for example, I'll keep going down that avenue with the Discover card. Let's say your Discover card has a 10,000 max credit and you owe 10,000. Well, your credit score is going to stink. It'll suck. It really will. So what you'll do is in that system, or we can even assist you with it, we play with it and say, okay, if we paid it down $1,000, $2,000, or $3,000 or whatever, what can that do for us? But let's say we don't want to spend any money. Well, another piece of the puzzle where you can work with is asking like we just said with the rent piece of the puzzle, possibly put your rents on your credit report. One big thing that helps very quickly is becoming an authorized user on an account. Be careful. Okay, be careful. You know what I mean by authorized user, right? You go to mom or dad or whomever and say, hey, I know you had a Visa card for 20 years. Have you ever missed a payment? And it's got to be somebody you really are tight with. Say, mom, yep, we have the Visa card. I put $100 on there each month, but we pay it off. Heck, we've had that since the 80s. Hey, can you add me to your card as an authorized user? Hold on, mom. I know I'm irresponsible, but don't even give me a card. Just put me on your account as an authorized user. When we get the card, we're going to tear it up, shred it, bury it in the ground in the backyard so I can never get access to it. But what that's going to do is now that's going to show on your credit report that whole history. And it might even go back before you were even born because mom had a credit card, at that time. But it now shows on your credit report and you're going to get a nice little boost on your credit. So those are just a few simple ways to do that. But I would please caution everybody, watch these, try to stay cautious of a lot of the YouTube hack videos because a lot of them are just bad. And again, that's why I created my first YouTube years ago in regards to credit scores, because, that was happening to me. I'd get a client, they just went to XYZ bank, got turned down, and then I pulled their credit. And I'm like, your credit scores are terrible. Well, yeah, they made me pay off, 5 collection accounts. Oh, but you can't go back now. You can't go back to those collectors and say, hey, I want the money back, put the collection back on there. It doesn't work that way.
Now, if somebody's not getting a loan like we talked about, and let's say they do have some judgments against them and they do have some money to my recommendation, because me personally, way back when I had to settle a couple of credit cards and you can do it all on your own and you can settle many times for pennies on the dollar. Mm-hmm. And then, I had a couple of inaccuracies on my credit report as well, where I had to just get this simple form, send it to the different credit bureaus, and it got off my credit report. And shortly after, my credit jumped up tremendously. And, ever since I've been in the 800s. So, any additional advice on that for people with existing judgments, like, and inaccuracies on their report?
So let's break down. There's different pieces of the delinquency factors. Okay. There's a collection, a charge off, and a judgment. Okay. It basically is you go late on a card or something, then you go to, collection, then you go to either a charge off or a judgment. Okay, so they're completely different pieces of the puzzle. So the collection accounts is where those are the ones to avoid. Okay, but you don't want to get it to the collection part or the charge off part or the judgment part, because that's not good. So the collection part, don't do anything with. All right, the charge offs, don't do anything with, because what happened with those, the company charged it off. Okay, so let's go back to the Discover card. Discover tried to collect. So now they can't collect it. So they either have to charge it off or sell your delinquency to a collection company. That's what normally happens. Okay. So I'm losing my train of thought here a second. So that once it's charged off, though, they can't legally collect it from you because the entity already charged it off. They wrote it off on their taxes. And so now they can't write it off on their taxes and get a tax benefit and then collect from you. That's double dipping. So they can't do that. So don't worry about the charge-offs, because don't pay them off, because the company already charged it off and you're just throwing that money away.
Is the charge-off not negatively affecting your credit still?
Yeah, it is, but it's done. Again, what happened was, let's say we'll go back to Discover. Discover tried to collect. They couldn't collect. Maybe then they sent you to a collection company, and the collection company tried to collect, and they're finally like, we're just charging this thing off. So you're stuck. You can't even pay it off because it's charged off. They legally can't. They'll probably take the money, but they're not allowed to. Okay. But then once it goes to judgment, now you got problems. Okay. Yeah. So it's going to show up on public records. It's going to show up on your credit report as a judgment and so forth. Those are the ones you want to get settled, because they can now go and garnish your wages, put liens on stuff and all kind of other things. But the charge-offs or the collections halt. Charge-offs don't pay. Judgments actively work those, because those could be really, really, really bad.
Yeah, and I've known other people with that actually out of nowhere old debt became a judgment, and they were going after wages. So, and they can legally do that, which sucks. One thing that you touched on, and I just want to confirm as well, credit even outside of getting financing is so vital. Good credit. And like Dan was saying, in terms of an employer, I knew somebody that had an accounting background, and they were going to get a six-figure position, and they had some minor bullshit on their credit report. And because of that, they were well qualified for the position and everything else. Because of that, they're like, this is an accounting position for our firm, and you're just, you're kind of irresponsible with this and this. And their credit report wasn't that bad, but they didn't like, high sixes or whatever it was because of it. And that ultimately cost a really solid position. So I think that's a good point that you brought up.
Well, a lot of people think, the credit score, it's just a bunch of bullshit. It's not, and I can't strive it. The best advice I can just give is be proactive and not reactive. Yeah. Because if you want to get that job, you want to get that car, you want to get that credit card, you want to maybe I would strongly suggest, if you're watching this video, call your insurance company or click the link down below to get another quote on your insurance. That industry is just nuts. And again, I'm personally, I was trying to show my invoices online to say, here's what my insurance was previously, here's what it is now, and my credit scores. I work on my credit scores all the time. As those go up, my premiums should go down as well. But
and I think you just brought up another really good point that I want to touch on. I think so many people they just ignore things in their life. And it's so rewarding when you can tackle things head on and knock it out and not be fearful of it and have this monkey on your shoulder, and it's there, it's stressing you out. It's not good for you. And a lot of people don't understand is they can make simple steps, even weekly, to tackle things like this. And when you do and you tackle it and you have a game plan, it becomes so rewarding. And then it's a trickle effect in your life. And before you know it, everything in your life gets better. And it's amazing. Like, so when the market crashed the last time, we did literally hundreds and hundreds of short sales. We helped a lot of people avoid foreclosure. And in that process, we were helping these people not only avoid foreclosure and doing short sales, but those same clients that we helped out, that we had them come back to our office and we talked about their credit and everything else, because ultimately they didn't want to rent for the rest of their lives. They literally wanted to buy another house in another 2 years or whatever it was. And I saw the pain in people's faces, and then I saw the gratitude and the happiness once they had a plan. And, you know, if I got to get a message across to anybody watching this, is just have a plan and take little bites out of it. And before you know it, your life will change.
Yeah. And a lot of these free systems like Credit Karma, Credit Sesame, they're free. Okay. They're free. That's the first thing I can say, but they're good systems. I probably get a blip every couple of days saying, hey, Dan, you know, you just paid off, you know, that credit card. Your scores just went up. Congratulations. Or, you know, you just charged on something and your credit scores might have went down a little bit. At least I know, you know, I know what's going on and I'm getting the alerts. And again, some of these free systems, they're great systems. They use the Vantage system, scoring system. But again, use that as a tool. If you go into the system now and your Vantage score is 500, well, try to get to 600. You know, so and because it will correlate over to your FICO score. But what I'm saying is, you know, when Steve asked, you know, what's the biggest criteria, how do you really start to tackle this, is to find out the benchmark. Where are you today, really, truly, and then start to work on it. And a lot of these systems, you know, the website I have, it has some systems on there. Google whatever you need to Google. There's a ton of stuff out there. Just don't spend a lot of money on it. That's the biggest piece of the puzzle I can say.
Yeah. Nah, man. Good talk. I appreciate it, man.
Cool. All righty. Well, it was great having you on today. If you guys need any assistance with mortgages, I would love to help. If you're down in Southwestern Florida and you need a realtor, I never know which way this camera goes. Hopefully I'll have Steve on here more often so we can start talking about these things. He's on the forefront talking with people, potential home buyers, and the questions that they have. And then hopefully I'm in the back room. I can be, you know, a think tank to help, you know, with credit, help figure out what program you qualify for, help figure out, you know, what's the best, you know, path for you guys to succeed. So Steve, I want to thank you for coming on today and at least responding to me, because I reached out to you on YouTube, and, you know, you did your due diligence. I hope you did, and you responded back. So thank you. I greatly appreciate having you.
Absolutely, man. I appreciate you having me on.
Cool. All right, man. Thank you so much.
All right. See you.
Okay, so we can pause that one. You have time for a quick 40-year mortgage, or you want to go?
Yeah, and you're gonna send me these, right? Because I'm gonna edit them up and throw them on my channel. So
yes, sir. I'll send you actually the downloadable link that StreamYard sends me, and I think there's a combo, and then there's an audio one and a video one. I'll just send you all three links. I'll probably just share the file with you in like Dropbox or whatever, and then just if for some reason you don't get access, or just blip me back saying, hey, I need access or whatever. But I'll just share the file with you. Then you have all this data. And then I'll put it together over the weekend, edit my version. I'll send it to you for your okay, and then we'll kind of go from there.
Yeah, cool.
You want to talk about 40 years, or you want to go?
Yeah, let's do it.
Okay. You want to start it?
What I was gonna do is, if you just want to start it for your channel, I'm gonna do an intro for both of these on mine.
Okay.
And then jump into it. So if it's for your channel, you can just rock with it.
I'll go ahead and do it. God, I wish I could brighten up my view, but I can't, because I'm going to spin my office or my desk around today to get away from this window. So, okay, I'll start it. Hey folks, welcome to the Update with Dan Frio. Today we're talking with Steve Daria, and we're going to talk about 40-year mortgages. And Steve actually reached out to me and he said, hey, Dan, what's up with all these 40-year mortgage programs out there? And I'm like, there's not a lot, but I know the buzzword. And you're starting to see all over social media and everything about 40-year mortgages, adjustable rates, and all this other stuff. So that's what we're going to tackle today on today's show. So welcome, Steve. Thanks for reaching out to me. Thanks for replying to me. And great questions that you have too, buddy.
Yeah, I appreciate it, Dan. Yeah, I mean, there's a lot of talk and there's a lot of turmoil in real estate and a lot of frustration in the real estate market. And I think that this is something that we're seeing more common. And even my audience, people are asking, should I look for a 40-year mortgage in order to afford a house? Should I get into an adjustable rate mortgage? And there's good and bad of everything. And this is one of the reasons why I wanted to talk to you today about the 40-year mortgage. Sure. The first thing I wanted to ask you is, we had, I don't know how many millions, what was it, 4.5 million people went into forbearance that took advantage of forbearance?
I think it was 7.1 actually.
Really?
Yeah.
Jeez. So, and I know the people, I think there's only maybe 500,000 people still left in forbearance.
It ended several months ago. And I think the last reading I saw was like 550,000 and they're working on stuff. They're working with their lenders. The good news about a lot of this stuff is you remember back in 2010-ish, between your short sales and everything else, is that crashed everything. I mean, it crashed everything. So at least the lenders figured out this time, it's better that we just work out some programs with these guys, because back when they were modifying the loans and there was a lot of government subsidies for these banks as long as they were trying to modify your loans.
Yep.
And they just hosed people. So now you're starting to see the banks saying, okay, you know what? We will work with you this time. We won't just make this a farce, and we might actually help some homeowners, get through this time. So
yeah, it was unbelievable back then how many people reached out to us that were just down and out because they tried to work so hard on modifying their loan, and it ended up going nowhere, and they're resubmitting the same documentation over and over. And then we eventually had to short sale a lot of properties for people. Question for you. Do you have any idea, and I don't even know if the data is out there, of how many people, because they did modifications, but I know some people opted to actually, in order for them to still afford payments, they modified into a 40-year mortgage coming out of forbearance. Do you know roughly how many people went into 40-year on just forbearance?
No, I mean, I don't know. I don't think they really published that data. I just know there were the last time I looked into things, there was about over 500,000 people, not much over 500,000 homes, I'll say, that were still getting worked on. And a lot of these people have been granted a 40-year term, and they're pretty good this time, actually. But you have to be, you hate to say it, but if you went through the forbearance, you came out and you're good, they're not going to help you. Okay. These are basically last ditch efforts to the bank doesn't have to take a loss. The people don't have to get uprooted and sell and move and everything else. That house then goes on the market. The lenders aren't in the business to own your house. I mean, everybody loses when a foreclosure takes place. So some of this week, actually, I reviewed two people's offers, and they were really good. I mean, really good. One offer I saw was 3.125 on a 40-year fixed rate.
Really?
Take it. I said that all day long. Take it. That's an anomaly, though. So basically, the 40-year program it's not widely spread out there yet. And let me explain to you the context of a 40-year mortgage. The 40-year mortgage was introduced basically just recently, that we've been hearing about on these modifications, where the people in the forbearance program basically is a last-ditch effort to save that situation. But there's what's called non-QM loans out there. They're not subprime loans of past, but they're specific banks or lenders or finance companies will package up specific programs that they use their own money with to lend. Okay. They're offering in some particular programs a 40-year option. Is it good or is it bad? Well, let me just give you the context of what we're seeing. On a 30-year rate, those loans, and if I confuse you, just let me know. Just say Dan English, please. The most mortgages throughout the country are established through Fannie Mae or Freddie Mac. Okay, it doesn't matter if you go to me, you go to Quicken, you go to Wells Fargo, Citibank, whomever. We use Fannie Mae and Freddie Mac's data system to get your loan approved. And they also can, basically do all the rates and interest rates and the funding of loans and everything else. Okay. I'll just simplify it that way. So conventional loans, standard loans go through Fannie Mae and Freddie Mac. When you have what's called the non-QM loans, those are private lenders that create programs that they lend their own money to, that they send it out there. Those programs normally, the normal rate right now on most of those are about 6.5%, all the way up to like 8.5%. Okay. Again, on the conventional side of the equation, you're seeing rates in some situations at 6.25%. So it would still, you got 6.25% on the high end over here on a 30-year versus possibly 8 or 8.5 on a 40-year over here. You're probably still better off taking the 30-year fixed on this equation, unless it just doesn't work, or this particular program is something you have to, you can't get approved over here with a standard loan. You have to go with a non-QM loan. So it's not widestream yet, the 40-year mortgages. And I don't see them being widespread because Fannie and Freddie don't offer those. And then I can also talk about the mortgage-backed securities market if you want. But that's basically, the mortgage-backed securities market is a bond that sells on Wall Street that is packaged up and sold to investors, and that money is being used for mortgages. So the MBS market doesn't work on a 40-year term. Everything is based on 30 years or 15 years.
So they're kind of like portfolio loans, and those lenders are going to keep them in-house. They're going to hold on to those loans instead of
It's just private money, basically.
Yeah.
Now, on my side, if I'm an investor and if I can lend it out at 8% on a 40-year term to somebody, I'd probably take it.
Yeah.
Just saying. Would I give them 4% on and hopefully get my money over a 40-year time frame? Probably not. But 6, 8. So that's why those rates are higher, because they're using private money, investor money, to fund these things. So most investors want a pretty good yield, especially if they're potentially giving their money out for 40 years.
Yeah, I mean, that's a long term, and there's probably more risk associated with it as well, which
an opportunity cost. If something else comes in, like we see the market, I don't know what's doing now. I'm getting more gray hair every day watching the markets. Dude, I see you getting them too. But it's I don't know. The markets are just I just posted a video this morning. I can't wait for this day to be over with. This weekend, I'm just unplugging.
Yeah, I don't blame you, man.
But
So if somebody is, let's say they're not able to qualify, because we're hearing adjustable rate mortgages, and I've spoken my opinion about my thought process on adjustable rate mortgages, and they're not good for a lot of people. Mm-hmm. But some talk about the 40-year mortgages. What is your take? Like, if let's say one of your kids is like, look, I can't afford a 30-year mortgage, but I can go and do the 40-year at a much higher rate. Like, what's your take on it? Would you say, go for the 40-year, or maybe you should rent for another year and stack money and see what happens with housing, see if it comes down, or what's your take?
I just I won't bail out. I'll just say it this way. It's an individual choice. I mean, I always say too, buying a house. I think you and I had a conversation. Should everybody buy a house? No. I mean, everybody shouldn't be buying a house. I'm the first proponent to do that. If my kids came in and said, hey, this is the only way I would qualify, that's kind of tough. If it's their first home, because you're over leveraging a little bit. But what I would look at is saying, okay, what are rents in the area, and how much would your mortgage payment be? So if it's the same in today's market, I might be saying, let's hold off a little bit. Let's just see if the markets start to cooler everything. But in some cases, if that payment would be decently under what your rent would be, then you start proposing, okay, do that, because nobody keeps a mortgage for 30 years, for 40 years. The average loan is out there, I think, like 8.6 years. Yeah. Okay. So when people always like, well, I'm going to pay this over the life of the loan or whatever, don't even look at that, because you're not going to be there for 30 years. I can almost guarantee you. So, maybe if it's their way of getting entry into the market, like I bought in 1989, my first home. It was an adjustable rate mortgage, interest only, ARM. it was the only way I can buy a house. And I'm glad I did, because my house payment was like $700 and my rent was going to be $1,500.
Yeah.
It was a kind of a no-brainer in that situation. I had that loan for 2 years and then I, got out of it. But it got me into the house, and I ended up selling that house 2-3 years later and made 30 grand. So I that wasn't the proposal. My wife got pregnant by me and everything. So there was other implements there. But that's why I always say, it's the personal preference and the situation in life where you are. But the one thing I'll say this, and it's kind of off topic a little bit. I still think, and maybe I'll ask a question for you. Are people, when people just say there's nothing out there, that's why I love having you on the channel, because you give me the front line of what's going on in the market. Okay. Are a lot of people, they're in a 1-bedroom, 1-bath condo. Now they're wanting to buy a 4-bedroom, 2.5-bath, 3,000 square foot home. Is that what you're seeing? Or are you seeing people like, hey, I just want a small little house to get into, just to get my own place and get started in real estate?
Couple things. I mean, for a while there really was, you got what you could get. There wasn't much inventory and many options. Our market is starting to shift here in Southwest Florida. But what I see a lot, and what I've historically have seen since being in the business in the early 2000s, is you got a lot of people that just they live above their means, and it's forget about necessity of having a roof over your head. People, they're all emotional about buying real estate. If they're approved for 350, they're buying up to 350. And there's very few people that I've worked with in the past that were actually logical when they were obtaining debt. And what I'm seeing in today's market is people are just looking at payments, and they're not realizing how much debt they're really taking on. And I think that some people will get hurt, especially, if we head into a recession. I think that we will see a certain amount of people that will lose their jobs. And even if they have a really nice, lower fixed rate, 30-year fixed or whatever the case is, they might have to sell. And then if they are at a break-even point, but they're not taking consideration closing costs to sell the property, they could be in an upside-down position. But I don't know. I know a lot of people are sick and tired of renting, to get back to your question. And that rightfully so. You can create a lot of wealth through real estate. That's how I have been able to create wealth. And I think it is important that people do have a strategy of growing wealth, and real estate is one way to do it. But like you're saying, it's individual circumstances, and it might not just make sense at this point in time for a lot of people,
Got it. Yeah. That's what I was just like, I got the iPhone 500. Do I need it? Not really. You know what I mean? But hold on, I got it. So, that's why I was asking that question, because a lot of times what I'll do is I'll go into like Zillow or some markets and just see, what houses are available. And it seems like there's okay amount, but again, I'm not actively out there in the forefront like you are. So, but yeah, basically to conclude this, the 40-year term, it's pretty simple. It's a proprietary product from a finance company, basically, put it that way. That's the number one piece of that puzzle. The secondary part of that puzzle is it's being used right now by lenders to help families stay in their home one way or another. But what you want to focus in on that is, this is what I saw last time in 2010-ish, when we had a big reprieve on modifications and things. Please watch. Here's what they did back when. Is they modified the loan. They said, okay, you're paying, $2,500 now. We're going to do everything we can to keep that payment the same, as close to that as we can, because remember, you're financing all this extra money. So then they would redo that mortgage on a 40-year term, and they would jump up the rate. Okay. So it would equate basically to their payment now. Those people just got hosed. Okay. Yep. And then they took any deficiency balance and added that to the end of the 40-year term.
Yeah.
At that point, I mean, conversely, the person got to stay in the house. They paid that payment. Probably would have been what they would pay in rent anyways, and they still own the house. So, sometimes you got to take the good with the bad.
Yeah, and those people probably lucked out all in all because they actually got an actual modification. Like,
right. But yeah, I was dumbfounded when I got some of these notes in, and the rate was like, they didn't even know most consumers didn't even know what the rate was. I'd look at them like, did you know you're at 7.5? They're like, no, didn't have any idea, but I needed the payment. Well, okay, that you answered the question. You had to do what you had to do. Yeah. So that's why there's no one cookie cut answer for anybody.
And I like that, man. That's how I am on my channel as well. As there's no right or wrong answer when it's all in personal circumstance on what makes sense for you and your family. But hey, I appreciate you clarifying the 40-year mortgage for us, man.
You bet, man. Well, that should do it. That should wrap us up for today. Sorry, this was a little short one, but we just wanted to, at least give you guys information about the 40-year term. It's not widespread out there. It's a unique situation for those in for, modifications, forbearances, or a non-proprietary product. So that's what we got for today. Hope you like the videos. If you do, please don't forget to give us a thumbs up, subscribe down below, hit the bell every time we post a video. You get an alert. Thanks, Steve. Great having you today, buddy. Look forward to more and more and more of these conversations with you.
Thanks a lot, Dan.
Take care, man. Later. All righty. So nice, I appreciate it. Dude, we've been on here for like an hour. I'll let you run. I'll dump these I'll dump these files right now. I'll share the folder with you. If you have any problem getting access to it, just let me know. And I'll help out in any way I can. And if you find out more about the housing thing that you're looking into, count me in, man.
Yeah, sounds good, brother.
All righty. Take care. Have a great weekend.
You too. See you
later, man. Bye-bye.